Hello and welcome to Connect, the weekly podcast for the California MBA, featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and I'm very happy that you could join us today. Before I welcome today's guest, I'd like to take a moment and thank our 2024 President's Council sponsors. And these are companies that provide a tremendous amount of financial support for the organization, in large part so that we can continue to be the strong voice for the real estate finance industry before the California State Legislature and our regulators. So please join me in thanking this year's President's Council sponsors. And those companies are AmeriHome, Arch MI, CMG Financial, Consolidated Analytics, Funding Shield, Guild Mortgage, and Western Alliance Bank. Thank you all so much for your support this year. We really appreciate it. And that brings me to today's guest. I'm very happy to be welcoming Tom Davis, who's the Chief Sales Officer at Deephaven Mortgage. Tom, welcome.
Thank you for having me, Susan. Pleasure to be here.
Yes, thank you. So I always like to start out with finding out how people got into the mortgage industry. So why don't you tell us about your journey into this business?
Yeah, we all have a different story, right? I got into finance early on actually it was in middle school. I had a sixth grade math teacher who was a financial advisor, and that's how I got into finance and ultimately got a degree in finance. Pretty much right out of college, I got into the mortgage space. I was an originator, then I became a wholesale account executive, and did that for about 5 to 10 years. I earned my stripes at JP Morgan Chase. I was there for 8 years, and right after the financial crisis, I was in a division at Chase at the time called the Rural Housing Division, so USDA lending, and was one of the largest, if not the largest buyer in the country on USDA loans when a lot of products, went away and credit got really tight. I was fortunate to be in an area where I was able to serve communities and borrowers in areas that were deemed rural throughout the United States, and really helped, stabilize those markets after the financial crisis. I did that for about 8 years, where I was a wholesale and correspondent rep at Chase, and then throughout my career, just been very fortunate to work with and some of the greatest folks in our industry, and had a lot of great mentors. And today I'm the Chief Sales Officer at Deephaven, where we focus on the non-QM space, and really excited about the space and the market that it serves.
I've heard a lot of great stories about how people got into the mortgage industry. I think you might be taking the award for earliest, entry with sixth grade. That's pretty impressive, I must say.
I didn't get into mortgage, but I was fortunate because I had a math teacher, and I used to have a small business when I was 13, 14 years old. I used to mow lawns in the neighborhood, and I didn't know what to do with my money, and so got me started in mutual funds, investing at an early age. So shout out to Alan Gaber for that advice. It was great.
I was going to say, shout out to the great teachers of our country. So there you go.
Absolutely.
It was a great story. There's some background. So you're talking, of course, Deephaven is one of the largest non-QM lenders. Why is non-QM important in today's market?
Yeah, so Deephaven is a very interesting and unique story. We were a pioneer in the non-QM space back in 2012. And I've been doing it for 12 years, help bring liquidity to the market, help bring, create a lot of the products. And it's been the non-QM space serves the underserved, right? Just like agency borrowers, there are non-QM borrowers in every town. There's self-employed borrowers, there's investors, there's high net worth, there's credit event borrowers, foreign national ITIN borrowers. If you just look at the aggregate of all these borrowers, just in self-employed, there's over 18 million self-employed people for 30 million businesses. Year to date, there's 28% of the purchase transactions in the market are investor transactions. There's over 19 million investment properties in the United States. We talked about foreign national ITIN, perm and non-perm borrowers. There's close to 40 million people in the U.S. that were not born in the United States. So that's about 14% of the population. And then, you have equity is at an all-time high. So you're seeing second liens really start to take off in a major way. Production is up in a major way when you look at it year over year. Borrowers are looking to consolidate their debt. The age of the average home in the United States is anywhere from 38 to 40 years old. So a lot of properties need to be rehabbed. So we're seeing some of that. And there's also, non-QM allows you to retain talent. It allows you to tap into referral partners outside of the realtors, CPAs, real estate investors, attorneys. It allows you to offer products that you might not be able to offer with the agencies, such as 5 to 9 unit, non-warrantable condos, residential transition loans, such as bridge, fix and flip, and ground up construction. And so as everyone knows, the market 2-3 years ago was about a $4.4 trillion market. This year we'll hit about 1.8. I think last year was about 1.6. And so with refi production being down the way it is, originators need all these products to drive their production, right? They need these products to tap into new referral partners. And in today's competitive market, non-QM is no longer a wish or a wish list kind of product. It's a must-have, and it allows you to give you a competitive edge against your competitors in the marketplace.
So what are some of the opportunities with non-QM?
Yeah, so the main opportunity in just non-QM production in today's production, it's still the bread and butter products out there. The bank statement product, which is about 50% of the overall production in today's marketplace, that primarily serves, your self-employed borrower, right? The DSCR program, which is your investor cash flow product for investment properties. That's another 30-35% of the market. So bank statements and DSCR loans are 80 to 90% of today's production. So if you're an originator, a mortgage banker out there, and you want to get into non-QM or really, specialize in it, I always highly recommend become very good at bank statement and DSCR because that's where the majority of the production, is being done today. I think another big opportunity for mortgage bankers today is, training their loan officers and helping them become experts. Many originators use non-QM as a solution for their agency fallout, but the most successful originators in the space, they're subject matter experts. They're product knowledge experts. They know how to structure deals. They're good at sourcing these borrowers. They know where to find the self-employed, entrepreneurial spirited borrowers. They become a part of their investor clubs in their local markets. That's where professional investors are. And once again, investor transactions last year were 26% of purchase market. Today, it's year to date, it's at 28%. So more than a quarter of the production is investor transactions. And if you don't have a DSCR option, then you're more than likely missing out on that production and under indexing that opportunity. And going back to the training piece, an originator is not going to be effective at originating those products if they're not trained on the products and they don't feel comfortable presenting it, right? So we're big believers at Deephaven in training and educating our partners at the loan officer level and helping them become experts and teaching them how to find these type of borrowers. We do a little over 100 webinars a month and have close to 14 different webinars. And so we train our partners on the products, deep dives into their products, how to find these borrowers. And if they're not comfortable presenting, we'll present on their behalf to their realtors or white label presentations where they could put their NMLS and logo, and we could help them drive awareness with their referral partners, including the realtors.
That's fantastic. Lots of training and resources. I agree with you. If the loan officers don't know what the products are, they're the front line, right? They need to be the ones that are educated on what's out there.
Yeah, and I would say non-QM is like any other originator, right? In order to be the difference between a pro and an amateur is training. The pros, they train all the time. And in any profession, whether you're like a wealth advisor or whether you're an attorney or a surgeon, if you're really, really good and you're an expert in your trade, people will do business with you. They'll seek you because you're the expert. So non-QM allows you to become that expert so that and it allows you to differentiate yourself. So we train our loan officers and our partners to introduce these products to the top realtors in the United States, because the top realtors, the top 5% of realtors in the United States account for 90% of the listings. And a lot of times those top realtors, they have originators that they work with, but those originators that they've worked with for the last 5-10 years of their, they don't have expertise in non-QM. So this is a great way to penetrate those relationships and differentiate yourself from the other originators that are out there that might just be selling agency and might be selling turn times, because everyone has agency and turn times. But if you have expertise on non-QM, it allows you to tap into those relationships where in the past you might have not had the ability to do so.
Right. Great points. So we are just past halfway mark for 2024. What are some of the priorities for Deephaven for the balance of this year?
Well, we got a lot on the plate, a lot of projects. We're focusing on a lot of different things, always trying to move the needle, forward and growing. We just the last couple months were, some of our biggest months we've ever had. We had all-time record months, just came off a couple months ago. But we're highly focused on continuing to scale through automation and efficiency. It's important to us that we maintain service levels and quality as we grow. As far as product innovation, that's a huge focus. We recently partnered with our sister company, Anchor Home Loans, to offer customers fix and flip, bridge, and ground up construction up to 10 million. Look, today we have a supply demand imbalance in housing. Experts say anywhere between 4 to 7 million units as far as a shortage. We've had a massive migration in the last 5 years, right? We've also seen inventory is at, let's call it a 10 to 15 year low. People, the majority of borrowers that have mortgages today have rates that are lower than today's market, so they're not interested in leaving, right? And so, or moving out, and so they're not selling their home. So there's kind of like a seller strike going on. People don't want to sell their homes because they're in these low mortgage rates. So, and there's this supply, demand imbalance in housing. So construction is extremely important today, and I see that being a big space over the next 10 years where there's going to be a lot of opportunity. In fact, construction, if you look at purchase transactions, about 30% of purchase transactions today are new construction, where maybe 3 years ago, over the last 10 years, it was only 10 to 15%. So new construction is important. And originators, if they have the construction and the bridge and fix and flip, they could bring new housing stock to the market through new construction. And one other way to be a part of a solution to the problem is having a fix and flip product to bring uninhabitable properties today back into the market once they have been rehabbed. So we're really excited about those products and being able to offer those to our partners to help them, provide a solution to the supply demand imbalance in housing that we're seeing today. And last but not least, we're like I said before, we're focused on growing the customer base. And working with our partners to help them with their training needs, and I believe adoption is we have a lot of room to grow there, as adoption becomes more mainstream and non-QM becomes even more mainstream, and originators across the nation fully adopt and embrace non-QM, the product will continue to grow. So we're really bullish about the space over the next 10 years, as well.
That's fantastic. Great opportunities for the company this year. Thanks for sharing that. Tell me a little bit about your delivery options, like delegated versus non-delegated at Deephaven.
Yeah, so we actually have a full offering of delivery, right? What's interesting is mortgage bankers traditionally like to bank their loans, right? And those two options, what we see is non-delegated and delegated. Non-delegated is where the banker will manufacture that loan, they'll process it, they'll disclose it, they'll close it. The only thing that we'll do on their behalf is we'll underwrite their loans for them and give them the decision, and they have to clear conditions. So that's one option, is non-delegated. And then of course there's fully delegated, where they manufacture the entire loan. They originate it, process it, disclose, underwrite it, close and fund, and we will purchase that loan. There are products that some mortgage bankers don't have the expertise in underwriting or don't want to put on their line. So we do have a wholesale opportunity for those mortgage bankers that are interested, and we see a lot of those mortgage bankers actually take advantage of that because maybe they don't have the expertise, or maybe they don't have the financing, the warehouse lines to bank certain loans. For example, a fix and flip, a bridge, a construction. If you're doing a ground up construction at 10 million, a lot of mortgage bankers don't have financing for a $10 million ground up construction that might take a year, right? So we have that option as well for mortgage bankers. The brokers, some products that maybe they just would like the broker instead of bank.
Sounds like there's a lot going on at Deephaven this year. Thank you for sharing all of that. Great opportunities with the company for sure. So Deephaven's, of course, a member of the California MBA. I'm always grateful for membership support. Your company's also a big sponsor at our upcoming Western Secondary Market Conference, which we're very excited about, our new location at the Terranea in August next month. Can you share with our listeners why the company chooses to support the California MBA?
Yeah, absolutely. I'm looking forward to the event as well, and this new location. I hear it's absolutely gorgeous, so can't wait to be there and connect with you, Susan. As far as supporting the MBA, we're part of the national MBA and very engaged with them. On the state level, we're part of multiple states, but in reference to California, California is a core component of the U.S. real estate market. Our national and state level economies depend on the continuous flow of liquidity to help our citizens and borrowers with housing. We have customers and employees in California. Our investment in this CMBA further supports our commitment to their success. I also think the CMBA does a phenomenal job in educating and supporting originators and mortgage bankers. So, those are some of the reasons why we support the CMBA.
Well, we're very grateful, Tom. Thank you. Thank you to you and everybody at Deephaven. And I can't believe it's already around the corner, but I'll see you in a few weeks at Western Secondary.
I'm looking forward to it. Thanks again for having me on today, Susan. It was a pleasure.
Thank you so much for joining me, Tom. And thanks to all of you for joining us on today's episode. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week, and we'll see you next time on Connect.